Welcome to Quantum Finance. My name is Parker. I'm the head trader here, but I am not a financial advisor, and this is not financial advice. So, in this video, we'll take a look at the economic data, we'll go over some news, and we'll do our market recap and market analysis. So, we didn't really have any significant economic data drop today, so we can look at the calendar for next week. So, Tuesday, we get core retail sales and retail sales. Wednesday, we get building permits and crude oil inventories. Thursday, we get initial jobless claims, the Philadelphia Fed Manufacturing Index, and existing home sales. And Friday, we have the Fed chair speaking. Now we can look at some news. So this is the 1-month Treasury yield moving up to 5.81%, which is the highest level we've seen with data going back to July of 2001. And this is the spread between the 3-month and 1-month Treasury bill yield moving from a record high of 1.78 down to a record low of negative 0.61% over the past 4 weeks. And here we have the combined usage of the Fed's discount window and bank term funding program up in most recent weeks to 92.4 billion versus 81.1 billion in the prior week. And this is the unemployment up in states with banks and tech. As you can see, states with the heaviest concentration in tech and banks are suffering disproportionately in terms of initial unemployment claims. And this is the world's biggest economies projection here for 2008 by the IMF. As you can see, the top three with the United States, China, and India. And here we have the blended money supply chart, which shows the year-over-year percent change in money supply. And as you can see now, we are negative. We are contracting in the money supply. If you look back, every time the money supply has contracted, there has been a pretty severe recession. And we also have Chairman Patrick McHenry announcing a digital assets, financial technology, and inclusion subcommittee hearing to assess how legislation will help to put the stable in stablecoins next Thursday, May 18th. And this is the real estate sector, obviously rapidly weakening. Home prices across developed markets are collapsing, as you can see the different countries here and how fast they are. The housing prices are collapsing here. And we have Elon Musk to step down as Twitter in 6 weeks. And after he announced that he is stepping down from Twitter, you can see the reaction in the Tesla stock price. And this is the immigration crisis at the southwest border. As you can see, the Border Patrol has reported 2.4 million encounters with illegal migrants in the last year, which is by far an all-time high. So now we can do our market recap. Starting here in the debt market, we have the U.S. 10-year yield getting a green day today after bouncing off that lower extreme yesterday and closing here at the midline. Looking at the dollar, big green day here in the dollar. If you remember yesterday's video, I did say did look like we were bottoming here and looked like we were going to squeeze to the upside. And that's exactly what we are getting today. As you can see, squeezing to the upside, pushing up into these highs here from April, making its way up here towards this weekly midline. Now we can look at the stock market. Pretty big red day today in the stock market with a pretty big wick to the downside, wicking down through that midline, and basically double bottoming here on Wednesday's lows. Turning to cryptocurrency, as you can see, that head and shoulders pattern that we were talking about yesterday is playing out here with it squeezing down through this lower extreme here, making its way down towards this weekly midline, which does line up with these previous highs down here. If you look at XRP now, green day here in XRP with a large wick to the upside. Maybe it looks like it's trying to find a bottom here, as it has wicked, kind of off the same level here for the past 4 days. Turning to commodities, we have oil getting red day here, continuation to the downside. After pretty much getting rejected really close to that midline here, just working its way back down here through the lower end of the daily and monthly ranges. Looking at gold, we have a red day here in gold, wicking down through the midline here, bouncing back up, but currently holding above that midline. This monthly chart is looking kind of toppy here, but as you can see, there's still a lot of time left in the month, so we'll have to see what happens. Silver, big red day here in silver as well, getting continuation to the downside after getting that large sell-off yesterday, making its way down through into this here price action from January, after really topping out here at the upper extreme on the monthly chart. But this is could be a significant level of support because there is a lot of price action through here. Now we can do our market analysis. We'll start with our volume analysis on the daily chart of the S&P 500. Another fairly low volume day today, as you can see below that volume average. Kind of split, but it looks like more buying than selling today, even though we did have a pretty big red candle with a lot of buying coming in at the close. We can turn to the 3-minute here. Let me zoom out a little bit. So as you can see, this is where we gapped up, big gap up here, running into these highs from Wednesday. and then really just selling off most of the day before bottoming around 230 and then getting a nice bounce and recovery into the close. We can zoom out a little bit here. So if you remember yesterday's video, I was talking about this trend line. So that is where we gapped up to and found resistance at. If you can look here on the 15-minute, as you can see, just gapping up here, running into resistance at that level. It was pretty extended here above the upper extreme on the 15-minute. So when you are pretty extended on the 15-minute and running into the resistance, you do expect it to pull back into the bands. We can look at the VIX and the NASDAQ as well. So the VIX here, as you can see, pulling down into the significant level here, the support from, looks like Tuesday. As you see, getting a nice bounce here off that level of support. Really pushing up into this resistance area before kind of pulling back here into the close. As you see the NASDAQ, we were talking about this trend line yesterday. This was a rising wedge pattern, which is bearish. As you see, it did break down through, but it did close back up inside of that trend line, with the momentum breaking here to the upside above this trend line. We can go back to the 3-minute on the SPY, talk about some trades. So really the best trade today was here in the morning, after we got this trend line rejection here off of that big downtrend that I was talking about. So the best trade today was like waiting until we got that breakdown through VWAP, coming up here for a retest. This would have been a nice area to get short into this VWAP resistance and rejection here. You know, just to fade down into these price action here from yesterday. Basically yesterday's highs. But as you can see, if you would have held this for a while, you know, this just really sold off most of the day. Something I do want to note about shorting this here though, if you look at the 15-minute here and the 2-hour, we did have really strong upward momentum to the upside on the 2-hour and the 15-minute, but you know how I said in yesterday's video, I do like to see like them line up. So I am saying this was good for puts, even though we did have upward momentum, because we were running into a major resistance line and we were super overextended to the upside. So this was an overextension play, expecting a reversal here in momentum. And as you can see, getting a MACD cross to the upside at about 3 o'clock, which did give us a lot of strength into the close. So 3 o'clock was here. You know, this could have maybe been a decent entry as well for call options off that MACD cross, pulling into this previous resistance here as support, just as a play back up to the VWAP area. So yeah, pretty big volatility today compared to, you know, Monday, Tuesday, and Wednesday. Kind of the same price action and same kind of candle here as we got on the CPI day on Thursday. Or on Wednesday. But yeah, closing the week off red here, but you know, we still have these strong wicks to the upside here on the weekly chart, and this was kind of just like a non-event kind of week, as you can see, just really just kind of going sideways for most of the week, not really having too much direction here. But with these big wicks to the upside here, as you can see, there is a lot of buyers sitting down here at this level, which is a sign of strength. And if you do look at the volume, as you can see, for the majority of the week, it does look like we got majority buying coming in this week, even though the week was a red candle here. But yeah, that should do it for the video. I appreciate y'all watching, and I will talk to y'all later.